Okay.
So 5 minutes. Okay. Welcome, student, to the Millennium Career Development Academy. Today we are starting our IFRS Diploma course. IFRS Diploma course is offered by the ACCA, and the exams will be conducted in June and December. So I think December 9 or somewhat will be the exam, that next attempt that is coming. So IFRS Diploma comprises of all standards. Few standards are not there, just like in the last attempt, IFRS 17, that is the newly issued for the insurance company, right? Insurance contract was not there, but I believe that this attempt, it might be there. So we will receive about the information whether it will be attempted insurance contract or not. Basically, when we talk about the IFRS and IAS, I will tell you in detail, but roughly you can say there are 41 international accounting standards were issued up till the 2002, right? And later on, the IFRS started from 2000 there, and 2001 IFRS started. IFRS right one adoption, first time adoption of the financial statement, international financial reporting standard. It came. So since then, we are naming the international standards as International Financial Reporting Standard. It means earlier they used to call International Accounting Standard, and we can see there are 41 standards have been issued here. In our diploma course, we are not following exactly in the sequence, right? We are not following in a sequence. We are following in the logical order so that how students can understand better. The flow is according to logical order, that how you can understand that.
Okay.
So here we will be going, first of all, first time adoption means if a company wants to transit from any other standards to national standards, from any country's national standard to international standard. So what will be the transition criteria? Then obviously it will be presentation of financial statement. When we talk about the financial statement, it means it's profit and loss, balance sheet, cash flow statement, changes in equity, notes, many things are there. So that's why, according to that, obviously IS1, then statement of cash flows, then obviously when you prepare income statement and all, so earning per share will be there. And then when you make your financial statement, there are a lot of notes that you show. So for that, obviously in that, what do you show in the notes? You show about the accounting policies, estimates, and many things you mentioned there in the notes. That is logical order. That, and once you prepare financial statement, obviously you have to consider some aspects, for example, events after the reporting period, right, etc., and then revenue from contract and borrowing costs, etc. Then here in the section 2, we have the property, plant, equipment, government grants, and intangible assets, investment property, and non-current assets, impairment of assets. So here, particularly, you can understand that property, plant, equipment can be acquired, right? Those are what we call fixed assets, right? So those assets, and the government can give grant sometime. And intangible assets, which means there are all non-current assets, right? Investment property is also non-current asset, intangible assets are also there, non-current asset, also property, plant, equipment, that now you are trying to sell it. So all are related to, you can say, non-current assets, and then impairment for assets, etc. Then inventories, provisions, etc. So, and later we have the financial instruments, first of all, lease, and then financial instruments, issues, etc. I mean, this is the order we have. So regarding the ACCA diploma IFRS paper, exam will be 3 hours, 15 minutes, and exams are conducted in June and December, twice in a year. The paper comprise of the 4 questions and 25 marks each question, and the passing marks is 50 marks. Student must get 50 marks, and result will be coming in 6 weeks. These are the results, past years, passing rates. So you can say on an average, it goes around 50%. 50% students who are appearing in the exam, they do pass, right? 47, 59, 60, 55, 37, sometime high, sometime less. A structure of the paper, as we discussed about that, question number 1 is about consolidation. Consolidated financial statement students have to prepare. Either it might be on the statement of profit and loss, that is the statement of comprehensive income or profit and loss, or statement of financial position, that is the balance sheet, right? Question on the cash flow consolidation will not be coming. Sometimes both profit and loss and balance sheet might be asked for consolidation, but majority of the time question will be on the balance sheet, right? Whereas if you talk about the question number 2, right, and question number 3, they will be asked on some particular IAS, and they say how you will be preparing reporting those things in the financial statement. Question 3 will usually deal with 2 particular IFRS standards in some detail. Such a question would require candidate to describe key features of IFRS standard and apply it to 2 or more situations. So how you will be applying this in the 2 or different situations. And question number 4 will present candidate with a scenario or range of scenarios for which the correct financial reporting treatment is complex or uncertain, right? That will be in different, you have to give, they will give the scenario, and they might ask you which IFRS or accounting standard will be used there. This is our brochure and there, and right. Regarding the ACCA diploma, we have this IFRS diploma study book, that BPB book we follow, right? And almost we will be completing it. So IFRS diploma, like it's comprising, these are the contents of the BPB book, and insurance contract was not there in the last exams. Let's see if probably it's there in December exam or not. So anyway, these are the details are there. So if you see part 1 or part A comprises of the more about the regulatory and conceptual framework, whereas part B comprises of the elements of financial statement, part C comprises of presentation of financial statement, part D comprises of external financial reports for combined entities and joint venture. That will be how the groups are formed, consolidated financial statements of the group, consolidated statement of profit and loss or other comprehensive income, associates, joint ventures, etc. So these are the ones that the 4 sections are there that will be followed, right? So let's start about the IFRS. The first question that comes in our mind, that why standards? What is IFRS? So IFRS is International Financial Reporting Standards, right? Issued by International Accounting Standards Board, right? Before it used to call International Accounting Standard Committee, right? So in 1970 it was made. We will see that. Why we need standard? You know, the major problem is that when company is making financial statement, so if 2 companies, if we talk about 70, 80 years back, so there were no even national standards. Remember, when a country, in a country there are accounting is recorded, so there are national standards are there. National standard setting boards are there. For example, if we talk about Pakistan, we have ICAP, ICAP. If you talk about India, ICAI in there. If you talk about the US, they have the ICAP, the CPA system, right? So and if you talk about the UK, they have Chartered Accountants England and Wales there, right? So those are the bodies are there which are the national standard setters, right? But if you talk about before that, there was a time 100 years back or so, there were no standard, even national standards were not there. So, and when there was no national standard, the problem was there that how these will be different accountants, according to their logic or according to their understanding, they were preparing the financial statements. But obviously, it's possibility there that something your one company is recording expense and some company will not be recording an expense. So that's why difference in the profit will become. As an investor, if you and me, we want to invest in both or either of these companies, so we will see the profit. Which company profit is there? We'll say this company is good, right? But probably that is showing less expenses, right? Less expenses they're showing right now, but later those expenses will be coming. Got it? So that might be the issue there. That's why, especially when the globalization started, there was a need. There was a big need that different countries, obviously, they have different regulation, different laws, and everything, and financial statements are prepared differently. So how means a consolidation you can do it, and how different people, different country people, they can invest in a company where a different way accounting is recorded, right? So that's why there was a need there. So first of all, it was analyzed, assessed at the country level. So country standard started just like in the US, in the UK, etc. The country standard started later there in different countries, and later on there was a need for international accounting standards. So there was a need for international accounting standard, and at that time, right, we saw
So
that
it means now if I use this IFRS and IS, so
yes,
my report will be accepted even in US, UK, or anywhere.
yeah, it will be accepted. Sure, it will be accepted, right? So earlier in the US, they were saying that if any country want to, let's say, if they are making financial statement according to the IFRS and they want to trade in our stock exchange, so they were saying that first of all you have to convert these financial according to US GAAP, right? Then you can
Hmm.
trade your shares there. But now they have, for so many years, I think 10, 15 years back, they allowed it. Okay, the IFRS-based financial statement, they can also trade their company in our stock exchange there. So second thing is that there is a, you can say, combined efforts are also doing so that the standard will be same, especially if you see IFRS 15 revenue, right? Contract with the, right, with customers, and there, so that is basically combined effort of US FASB and IASB, right, International Accounting Standard. So both combined, they have developed IFRS 15, although there still changes are there. It's not there actually. There was a timeline. There was a timeline that when these all of the companies will be coming under the International Accounting Standard umbrella. Anyway, let's see how widespread is adoption of the IFRS there. So 120 countries are following IFRS, and 19 countries have fully conformed with the IFRS, right? I think you were there. I had showed you that how uh, in different countries how much they have adopted. Pakistan has also adopted, right? And India also adopted, but not 100%, right? And this is about the small medium enterprise companies, especially according to the UAE side. I just wanted that we should know that this is the, right, in the UAE, you can see accounting standards in Dubai. So all companies who are trading in the Nasdaq or Abu Dhabi Stock Exchange, etc., they must follow the IFRS, right? For other those companies which are not listing, it's not binding, but obviously they should prepare financial statement according to that, especially once the corporate tax is coming. So this is becoming kind of mandatory that all companies should prepare their financial according to that. But obviously, the small medium enterprises, we have a separate standard on small medium enterprise, right? So you will, right, we have IFRS, right? IFRS are there for SME, small medium enterprise. This is also there, but that is the requirement is little less, right? When we will go to that point, I'll tell you that what things small medium enterprise should do, just right. So some smaller companies, they have been given some relaxation in preparing the financial statement according to IFRS, right?
Here, the small and medium enterprise we decide on the basis of their value of investment and and the strength of their employees. Means how
Yes,
many employees they
yes,
have.
exactly. Both are there. So both are there. So Right. So the decision confirmed that international financial reporting standards are the applicable accounting standard in the UAE and must be used by larger companies that have a revenue more than 50 million. Right?
Million.
But it is also there according to the number of employees, etc.
Hmm.
International accounting financial reporting standard, when we talk about, so IASB, International Accounting Standard Board. Before it used to call IASC, International Accounting Standard Committee.
Commit.
So up till 2000, we have International Accounting Standard Committee, and the standard were issued, they were called International Accounting Standard, and they used to say, write if those standards which are complex on the, and they find that the people are doing different treatment, means then they issued the interpretation. So for IAS interpretation, it was called SIC, and once the in 2001, we saw that IASC become IASB, International Accounting Standard Board, become in 2001, and those standards were issued by IASB. They are called International Financial Reporting Standard, and their interpretation is called IFRIC. Right? So SIC is the interpretation for IAS, and IFRIC interpretation for IFRS. Is it clear?
When you say interpretation, so what does it mean? It means that it will show that how we can treat particular type of account.
Actually, sometimes it's happened that some people or some companies, like they will not understand the
Let's
standard
say in my
well.
mind, when I learned business law during my MBA, so
Mhm,
our teacher they told us that there is interpretation for each law. So
mhm,
it means that law is in a crude language. You cannot understand. If you will directly read the law, you will
mhm.
not understand what it is. But there is interpretation for that, so that you can understand easily that what that clause is saying to you. So the
Exactly.
same applies
So,
here as well.
yeah, in interpretation, like you can see, there might be examples might be given, right?
Hmm.
Some numerical example might also be there, and some, like sometime, for example, if revenue is there, if right, revenue is there, so just let's say we have IFRS 15, before it used to be IS 18, but for barter type of transaction they were separate. SIC came, so that was mentioning barter type of revenue, how you will recognize. You got
Hmm.
the point. So, right, so for sometimes some point is there in standard which is not in detail mentioned, right? So, but in detail, right, if you want to see, so some, if they, especially when the advisory council, they find that the people or companies are doing wrong treatment or different treatment of the same thing, right? So that's why, like, they will be releasing the interpretation, and in that they will try to solve. For example, IFRS 15, revenue with contract with customers. Now, that particular standard, your IFRS course is 50 plus hours. If you want, I can teach you 50 plus hours only IFRS 15. You get the point,
Hmm.
right? So means there is a too much depth. If we talk about the revenue, the whole world, whole hundreds of types of industries are there, and many types of companies are there. So all types of revenue, it means it will go to what length you can understand, right?
Hmm.
So if any they find that ill treatment, mistreatment, or they want that people should understand and properly, so that interpretations will be issued.
Hmm.
Right. So IFRS, International Financial Reporting Standard, right? And business affairs, so that company accounts are understandable and comparable across international boundaries.
Boundaries.
So we all already discussed that. So when global companies have become, and the companies, one company is going to another country, etc., and they are doing it, so that it will be understandable. If the same thing is there, so it will be understandable, right? When we talk about the regulatory framework, so what is the regulatory framework? Regulatory framework for the provision of funds is necessary for a number of reasons, right? To ensure need of the users of financial statement comparable information will be there, it will be consistent year by year, and to increase the confidence of the financial reporting, right? So if every company is preparing financial statement differently, so nobody will rely on that, right? Next thing,
Yeah.
we talk about the national regulatory framework. So means regulation, national regulation. Regulation means laws, etc. So when we talk about the national regulation, remember the first thing we have to consider is the national law. Law is the supreme. For example, different standards are there, right? Which are we IFRS 9 Pakistan is not following. IFRS 1 is also not following, right? And different countries, they are also not following. And similarly, India, they have also, for their domestic companies, they say that the accounting standard they call AS, accounting standard, they should be followed, right? Anyway, so laws are there that, and then obviously national financial reporting standards are there, not international. This is what? National, right? So when we talk about the any country's regulatory framework, so we will talk about that will be national financial reporting standard. And remember, national financial reporting standards, right? They will be normally means the countries will adopt the international financial reporting standard for their national standard. Are you getting? So right, so that they will be saying, yes, they told you that just like if I tell you about India, India is having AS, accounting standard. If you say AS2, is same inventory. If you say AS16, is same property, plant, equipment as the international standards, right? So the standards many times, not all, but many times the numbers also countries are keeping same as the international standards number, right? Sometime might be different. In the world, basically three big standards are there, international. One is the international accounting standard, which I think we discussed already, and 120 countries are following. The other is the US GAAP. The third is the Japanese standards, right? Remember, all of those standards, they had to come under the, you can say,
IFRS.
IFRS, right? But I think I have deleted those slides. So, but in 2016, there was a timeline there the US also has to come, right? Canada, they had their own standard, they come under IFRS. Then Australia, they come under IFRS. First one, the European Union, right? Who have accepted international financial reporting standard as their standard, but they have their own national standards as well. Anyway, so basic purpose of accounting standard is harmonization, that everybody should be accepting those things, etc. And when there is a standards are followed, so efficient capital market will be there. So obviously you can understand that every company is preparing financial statement according to the IFRS, right? When
This
they're preparing,
IAS and IFRS is coming from where? Gap is coming from US.
no. Gap is from US, right? And
Mm-hmm.
from European Union, means it started from UK and then Europe, etc. These were the first countries. They in 2005, Europe accepted international accounting standard as their standards in 2005.
Okay, so it's European based.
Kinda, you can say. And if you talk about the difference between the US and UK, so US is more rule based. They have hundreds and thousands rules are there, right? So that's why, like, means if you go through about the CPA or CMA, this year only, this year 2023, now they have started that they will not give the reference of the, I'm talking about the CPA, right? CPA, they mentioned that we will not give reference to the any IFRS. Otherwise, just like we are teaching the CPA and CMA as well. So CMA, still they mention that, for example, if you're doing the impairment, they mention impairment and IFRS difference in impairment. You got the point. So you are
Hmm.
studying the American base, but they are also telling the IFRS differences as well. Just like property, plant equipment, IS 16, so they will mention what is the IFRS difference in that. Agree? So, but
Hmm.
CPA, I'm telling you, CPA this year they have started that they will not give reference to IFRS. It means now they started to mention their standard, but because there are so many rules, thousands of rules, so that's why the reference of this rule particularly you will very less you will find. But in IFRS, total IFRS, how many there? Probably 42 or somewhat.
IFRS are 17, no?
No,
Last time you put.
no, I'm telling you about total standard which are up till there. Let me show you.
Okay, IAS are
Because
42.
so many have been cancelled, right?
Hmm.
I think I had the one slides for that here, right? No, I think here, right? So you
Hmm.
can see here, these are IS.
Hmm.
1, 2, 3, 4, 5, 6 suspended, right?
Hmm.
7, 8, 9 is not there, suspended. 10, 11, 12, 13, 14, 15 are not there, right? And
Hmm.
IS 17 also suspended, right? So you can say IS 11 also suspended, right? 15 has come in place of IS 11, right? IFRS 15 has come in place of
As
IS 17.
our company is engaged in construction business. So
Hmm.
what kind of IAS we will have?
Actually, now construction contract IS 11, right? It's been suspended, and revenue with contract with customers IFRS 15 has come.
Okay, okay.
Here is the IFRS 15, revenue from contract with customers. So all type of revenue actually has come under IFRS 15 except interest and dividend that is going to the financial instrument IFRS 9, right? So otherwise all revenues are now in one umbrella. That's very nice, right? Under one umbrella, because when I will teach you the IFRS 15, so then I'll tell you about six, right? Two standards and four SICs have been merged into one IFRS 15. So that is big thing. Scattered things now have come under one umbrella, right? So what I was telling you that you can see IFRS 4 insurance contract has been suspended as well. Instead, new standard insurance contract has come. It means 16 are IFRS, right? 16 IFRS which are there. And what about the IS? You can see around 23 or 24 are still operational, otherwise suspended. Am I right?
Hmm.
So that I was telling you, around 42 total standards, including IAS and IFRS, they are still there. Agree?
Okay.
Because IFRS is basically conceptual based, right?
Hmm.
According to concept, they are designed. But if you talk about the US GAAP, this is the rule based. So they have thousands of rules, right? So rule numbers, etc. These are there. Anyways, so we discussed about this is the timeline I was showing you, right? 1960, 1973, like international accounting harmonization standard started 1960, 1973. International Accounting Standard Committee was formed, and then standard started 2000. ISC become IASB. In 2001, ISC reformulate to ISB, as I told you, right? And all standard adopted, right? All standard means all IAS now adopted under IFRS there and renamed to IFRS. So new standard will be now IFRS there. And 2002 EU decided to adopt, and 2005 EU adopted, right?
Hmm.
The standard there. Then 2006, right? China started IFRS and G20 World, etc. 2009, Singapore, 2011, Korea, 2012,
Hmm.
Eastern Africa, Malaysia, 2016, India announced adoption of IFRS, but it's
India
not,
is that late?
sorry.
India is that late? It announced in 2016.
Yeah, still means of domestic companies, they still say, okay, you can use national standards, right? So for but those which are foreign companies or like this, so they say, okay, you can adopt the IFRS, right?
Mm. Whereas I
Anyway,
believe in Pakistan it was already adopted.
yes, not 100%, but majority they were adopted, right?
Mm.
So that we discussed about that regulatory framework and what was there, I see. And remember when we talk about the
So one thing I want to clear is
yes,
that IFR is actually the, you can say, the consolidation of IAS. Is it like that?
I mean, what do you mean by consolidation? Basically, IAS, right? International Accounting Standards
Hmm.
were issued by International Accounting Standard Committee, right?
Hmm.
So they was
Hmm.
issued, and then same committee become the IFR, IASB then, right? So
Hmm.
same committee, same body, right, become the International Accounting Standard Board, and International Accounting Standard Board, what the standard they issued after 2001, they are called IFRS. So still IAS also running and IFRS also running.
Both are separate.
Both are separate. They are still running, right? But
Right.
as just like if I tell you about when the new things come, for example, insurance contract,
Hmm.
IFRS 4 came. Before insurance contract, there were no separate standard was there for insurance contract. So means it was there just like revenue related things were there in IFRS 15, or you can say if you talk about before IFRS 15, we have IS 18 revenue. So and then there was there in financial instruments, investment things were there in financial instrument, right? But then they realized that insurance is a big industry and they have a lot of different types of contract, not only the things. So that's first of all they started the insurance contract IFRS 4, but it was not at the time it was issued, it was not clear. The it was clear that we are starting only at the starting level. So many things are not still there in IFRS 4, and then it's a developing standard. It means we will have to add many things. But what happens sometimes, sometimes a standard is coming and the two or three standard might become one standard, right? For
Hmm.
example, if I talk about, uh, as I told you about IFRS 15, right?
Yeah.
IFRS
Revenue.
15, I told you about that before they were, IS 18 was there, revenue, and there was one more standard. We had IS 11 construction contract, right?
Hmm.
So two of them, now the two standards, sometimes what they do, they just, you can say, revise that standard and the same standard number remains same. You got the point. For
Hmm.
example, IS1 presentation of financial statements revised so many times, right? It
Hmm.
was revised so many times. But here, as I told you that IS 11 and IS here, if you see, here is the IS 11, right?
Hmm.
Right. You can see this is IS 11 has gone to IFRS 15. IS 18 also gone to IFRS 15. So if they revise, which number they will give? 11 they will give or 18 they will give, right? So
Hmm.
that's why they suspended both of them and they have brought into IFRS 15,
Hmm.
right? Secondly, they sometime what happened, just like if we talk about the leasing or other standard, sometime it happened that some components are also coming from other standard, etc. So what they will do, they will cancel one standard and they bring new standard, right? For example, here I told you about IFRS 4 insurance contract and suspended, and IFRS 17 has come. The question arises that why don't they revise IFRS 4, right?
Hmm.
So they
Yeah.
can revise it and give it the same number. But because there are some contents were also coming from IFRS 9 financial instruments, right? So
Hmm.
means contents are also coming from other standards. If the same standard is revised, that's okay. But there are some points are coming from other standards as well. So then they will say better they suspend this one and bring a new one. Got it?
Hmm. Hmm.
Anyways, uh, And these are the standards keep on changing, because standards are not the, you cannot say it's a universal fact. Just like we say H2O, okay, this is two atoms of hydrogen and then oxygen, like this. It's not like that. It's not a physical thing. So as the world changes, as the reporting requirement changes, so these standards may also change. Agree?
Mm-hmm.
Okay. Uh, so right, that we discussed. I was telling you about this because it's very important that you should understand the structure of the whole your accounting things. Basically, we have a monitoring board. Before there was, as you saw before, I told you IASB,
Mm-hmm.
International Accounting Standard Board is there. Later on, IFRS Foundation was made that will overlook the matter of IASB, and it will be appointing the members of the IASB.
Yeah.
And then later on, IFRS Foundation, one monitoring board also came on that. So monitoring board will be overseeing the IFRS Foundation, and IFRS Foundation will be looking about the ISB and IFRS Interpretation Committee. What we say IFRS, IFRIC, right?
Mm-hmm.
Right. So interpretation committee is there. So ISB 14 members, and they set technical agenda, approve standards. So this is the body that makes the standard, right? This is the body that issues the new standards, but it is held out by the advisory council. You know that whenever the new issues are arising,
Mm-hmm.
right? So new issues are arising. We saw, in 2008 financial crunch, and before, in the you can say 1990 somewhat, they were, especially these financial instruments, means we say about shares, bonds, swaps, caps, collars, options, put option, call options, right? So there are
Yeah.
so many types of securities are emerging, right?
Mm-hmm.
Nowadays, cryptocurrencies is there. So these are the standards which are new standards are emerging, right? New securities and all they're emerging there. So whenever the advisory council is one there that they analyzes that there are the new issues are coming, or the sometime wrong treatment is done according to some standard, or sometimes they feel like that people are not understanding something well, some standard well. So they will be advising the IASB. And when IASB will look over on that, and then if they feel like that this is a matter, this is a developing matter, and it might be affecting the reporting things, etc. So they might make a working group for that, right? Working group for that, and then they will be working on the agenda, right? On the working that we will see later on the how standard will be made on that. So this is the working group that is working. For example, if I say IFRS cryptocurrency, on that they will make a working group, right? So they will analyze in different countries that how the different types of cryptos are developing, etc. That they'll do it. Whereas interpretation committee, I told you already, 14 members issue interpretation on application of IFRS and develop other minor amendments, right? Just like I had told you that before IS 18 revenue was there, but for barter transaction, there was separate SIC, right? So separate interpretation was there. So when they feel like that any particular address standard could not address well, right?
Mm-hmm.
So they might issue one SIC, or right now IFRIC, etc. Accounting Standard Advisory Forum provides standard setter input into technical projects, right? So this is the complete, you can say, structure diagram of IFRS. And so, and here, this is the three, you can say, levels are there when the standards are made. First is the research program. Research will be done, then it will become a discussion paper, then it will become a proposal to make a standard. right?
Standard.
So research and discussion paper, if you talk about, obviously there are so many accounting and auditing bodies are there, other securities bodies are there, security exchange bodies, and different accounting forums are there, organizations are there. So they will be having healthy discussion on that. So they will prepare a proposal that yes, we need to develop a standard on a developing matter, right? And first of all, it will be exposure draft that will be in the technical language. So that will be in technical language and might be too much detail. So once exposure draft is made, so then they will try to condense it, right? And then make it easily understandable language. This will be IFRS, right? The way standards we are teaching and other people are teaching, and if you see the standard itself, you will say there's a quite too much difference, right? In our chartered accountancy, we were directly studying from standard, right? We directly studied from accounting standards, particularly, and that was too much verbal, too much verbal. Only theory is there if you see any standard, right? They will not be. Rarely there will be some example, etc. But application, we have accounting books, etc. Right? So over their application, we do it. Anyway, the published IFRS will be coming after ED or exposure draft. And once, remember, published IFRS, this is not a kind of any kind of religious book. It's not a divine book, because people will criticize, and criticism is always healthy, right?
Yeah.
So it will tell about what are the means the wrong things are there, what it should be revised, etc. So that post implementation review will be there. Regarding once a company decides that it should adopt IFRS, it should adopt International Financial Reporting Standards. So once it decide that it should adopt the International Financial Reporting Standard, so at that time they have to prepare the right opening IFRS statement of financial position, right? And how many IS1, right? If you say about how many financial statement we have to prepare, at least 3 statement of financial position. Why we will make 3 statement of financial position?
The three statements of financial position means you are saying that income statement, balance sheet,
No, no,
and
no. I am taking financial position means balance sheet only, right?
okay.
So balance sheet will make of 3 years, right? It means you know that when you see any company's financial statement, so this comprises of current year and the prior year, right? 2 years, right? 2 years are there. But as you're making, suppose I am making the 2022 financial statement. I am in 23. I am making 2023 final, right, financial statement, suppose. So in that financial statement I'm making, so I should know beginning balance, right?
Yeah, the beginning balance.
Beginning balances I should know, right? Then I can see what is the ending balance, especially if you see profit and loss account you're making. So you need the beginning inventory, right?
Yeah.
And beginning inventory is the ending inventory for the last year. Agree? So so it means the this year 2022 beginning inventory, right? It will be 2021 ending inventory. Agree?
Yeah, correct.
Right? So I need the beginning inventories, beginning receivables, many things I need. Beginning, right? Beginning data I need it. So that's why if I'm making the current year financial statement, I need the beginning. It means I should have the previous year financial statement as well. Agree? It means 2022 balance sheet I'm making, so 2021 should also be there. From that, I will get the beginning balances, right? Whereas if we obviously I have to show 2 years, right? For comparable purpose, 2 year financial statement. So it means I'm making 2022. So I have to make 2021 as well. right? And 2021 financial statement I'm making. So beginning balance will be coming from 2020. Agree?
Okay.
Right? So that is why, because I have to show 2 years data must, and 2 year beginning balances also should be there. So it means 3 year statement of financial statement will prepare. Agree?
Yeah.
Because 22 beginning, 2020 beginning will be coming 2020 ending will be 2021 beginning. So we need the beginning balances as well, right? So that's why 3 year statement of financial position, because balances are coming from balance sheet, right?
Yeah.
Balances are coming from balance sheet. When you see about the profit and loss, that is statement of comprehensive income or statement of changes in equity. So that is 2 years required,
Okay.
right? So logic, you understand why 3 years of balance sheet?
As you are saying that the opening balances will be counted for the previous year.
Mhm. Yes, exactly.
But I mean, what is the main reason behind 3 years? Why we cannot do for 5 years, or let's say 2 years? I mean, is there any particular reason only for 3 years?
No, I told you about, right? You know that when you make a financial statement, right? Annual report we make. So we must have 2 year parallel data, right?
Yeah, correct.
2 year parallel data. So it means current year and the last year, that you understand, right?
Yeah.
That you understand. But here we need the beginning balances as well. Why we need beginning balances as well? Because you know that, let's come to next slide, you will understand. This is slide. So what is the transition process? Transition process is that first of all, you should make accounting policies. Accounting
Hmm.
policies according to the IFRS, right?
Hmm.
Policy should be according to the IFRS.
Yeah.
It should not be according to the GAAP or any other standards.
Hmm.
Agree? So policies should be according to that. Accounting policy, for example, depreciation method,
Hmm.
right? Inventory methods, right? So
Correct.
inventory method, for example, there's a FIFO, LIFO also there, right?
Yeah.
Weighted average. But LIFO is not mandatory according to IFRS, right?
Hmm.
So IFRS says either you should use the FIFO or weighted average method, right?
Hmm.
You got the
Hmm.
point. So
Yeah.
when these are mentioned, now if I was making my previous financial statement and I was recording inventory according to the LIFO method, so I have to change my policy, right?
Yeah.
You got the point. I have to change my
Yeah.
policy now. So this is
Yeah.
accounting policy there. Then it comes the recognition of assets and derecognition of assets and liabilities. Suppose I was using the LIFO method, and LIFO method I was using, and in that LIFO method, right, my inventory was of $2 million, right?
Yeah.
According to LIFO, right? But
Yeah.
that 2 million I will derecognize. Agree? I
Yeah.
will, right,
De-recognize.
derecognize, especially that will come in the measurement, right? So derecognize, here particular derecognize of assets liabilities means that there are some assets, right, or liabilities that you might be recording as an asset before, or you might be recording liability before, but they are not assets and liabilities according to IFRS.
Hmm.
You got the point. They are not assets or
Hmm.
liabilities. So those you will de-recognize, and you will recognize those which are assets and liabilities according to IFRS. For example, research and development expenditure.
Hmm. Hmm.
According to US GAAP, both are expense out. Both I incur either $10 million, $100 million research and development expenditure. I have to show in the profit and loss in the current year. Agree? This is US GAAP. But IFRS says that research cost you have to show as a expense, right? Whereas development expenditure you can show as an asset, right? Development
Hmm.
expenditure you can show as an asset when the criterias are met. What are criterias? Estimations, right? Estimate of revenue, estimate of the life, estimate of the cost, total estimate of total revenue, what you will be getting during the lifetime, estimate of total cost you will be getting to develop that asset there. And similarly, for life estimate of completion, development time. When 3 years you will develop, 4 years you will develop, when your development will complete. This is the estimation side. Similarly, we have resources side, financial resource, human resource, technical resource, etc. Resources available, you can use or sell, right? And economic benefit will flow to the entity. When these criteria are met, so you can show that expenditure as an asset. Agree? Development expenditure. So suppose before I was recording the expense, now I can capitalize, right? So this is development expenditure, right? So this is about recognition of assets and liabilities accordingly. Are you getting?
Yeah.
Then reclassification of assets and liabilities. Probably earlier I was showing something in current assets, but according to IFRS, it might be non-current assets, right? Or otherwise. And similarly, finally, measurement. Just like I told you, inventory example. So inventory I have to measure according to the not LIFO, but either FIFO or weighted average, right? So this is the transition process. So now you can link up with this question what you are asking, right? So when you see that we had any previous balances, right, and we were following the different policy, either asset we were recording or not recording, you got the point. So it means we need the beginning balance according to IFRS, right? You got my point, right? So that's why we need to make the 3-year balance sheet, because balances are coming from the balance sheet, statement of financial position, right? So that's why we need to prepare 3-year financial statement. And 2-year, obviously, whenever you make annual report of your company, right, you're making current year, but last year data is also available, right? So 2-year annual reports are shown simultaneously, right? What is the objective of financial statement? Remember, objective is to provide information to the users, right? Stakeholder, you have to provide information to them, right? And stakeholders, when we talk about, it's not only shareholder, it might be lenders, it might be supplier, it might be customer, it might be regulatory bodies, right? So, and even public, taxation department, right? Government. So these are that you have to provide information to them, right? And how you provide information, you tell about the position of the company by preparing the balance sheet, balance sheet, statement of financial position, and you show the performance, either good profit, bad profit, less profit, more profit, by preparing the profit and loss account, what we call statement of comprehensive income. And cash flows, where your cash, from where your cash has come and where the cash has gone. So this will be objective of the financial statement. So when you talk about the general features in the IFRS, what are the features there? Main thing is that fair presentation and compliance with IFRS. Fair presentation means a true presentation, right? Whatever the true is there, that we will mention. For example, you have the financial statement when you prepare. There are so many assets you record according to the historical cost. Right? For example, you buy building. Building is recorded at cost. But right now you have to decide your policies. For example, depreciation methods. Right? Either the straight line method, reducing balance method, output method, whichever method you're following, right? You have to decide that. So on that basis, right, obviously, your carrying value will come. Cost minus accumulated depreciation, this will be your carrying value, right? So, right, when you are doing depreciation, it should be fair presentation. For example, if I say an asset is there, its life is 5 years. Suppose 50,000 is the cost of the asset and life is 5 years. It means 50,000 divided by 5 years, 10,000 depreciation. But instead, we say, oh, 10,000 will be too much expense. Okay. Instead of 5 years, depreciate in 10 years. So 5,000 depreciation will come, profit will increase. Agree?
Yeah.
You getting?
to
Sorry?
ask here, how do we determine the salvage value? I mean, it's a bit advanced question for now,
Mhm.
but can I have just an idea about that? Let's say if I want to record a
Actually,
depreciation
that uh,
for a vehicle,
mhm,
so what I will do in general, what I will do, I will go to some website and let's say do business. I
mhm,
find a similar vehicle there, a
mhm,
similar year model, and
mhm,
I found that the value of that vehicle now it's 10,000.
mhm.
I will consider that 10,000 will be the salvage value.
Actually, we have two types of things. We have active market for some assets, and for some assets, we don't have active market,
Yeah.
right? So you, for example, if I talk about property, there is an
Hmm.
active market, right?
Yeah.
Right. For vehicle, you mentioned there is an active market. If we
Yeah.
talk about the future, especially we are here in UAE, so is there active market for which furniture? No,
No.
no. If you have use furniture, if you even you will try to sell in different like Dubizel or somewhere there, very rare chance you will be able to sell. And if you sell it 10,000 furniture, probably 1,000, 2,000,
Yeah.
right? Many people tell me stories about we about the furniture for 7,000, sold for 500. They told me about, right?
Yeah.
So this happens. So you know that active market or not an active market. When we'll go to relevant standard, we will calculate that as well.
Hmm.
Okay. So going concern, we do know that company, when you say company should be a going concern, it means it should be a running company. Running company means they neither they have intention nor necessity to close down operations of their business.
Yeah.
Right. Now,
Correct.
what mean necessity? For example, if a company has taken loan, but they are unable to pay loan, they are unable to pay interest, they don't have any chance. The lender might go to the court, say, we want our money. Court say, just dissolve, pay the money, right? So this is
Yeah.
the necessity, right? They
Yeah.
cannot continue. And sometimes they are not willing it. Just like you know that many people working abroad, doing business abroad, but sometimes they might get fed up. They
Hmm.
say, come on, profit, company is making profit. But they say close this business, or they want to switch the business. So they
Hmm.
might close this business and start a new business, right? Or
Yeah.
they might sell this business and start new business. So in this case, it will not be going concern. Am I right?
Hmm.
The company
Hmm.
will not be going concern. So people don't understand that what it makes difference. This is a huge difference. For example, you're making your balance sheet. Let's suppose you have machinery, right?
Hmm.
You're recording cost minus accumulated depreciation, if any impairment. Suppose
Yeah.
100,000 cost, 40 depreciation becomes 60. 60,000
Yeah.
is your carrying value you are showing in your balance sheet.
Yeah.
But
Correct.
if you are saying my company is not a going concern, either you're closing or whatever way. So 60,000, you will not record at 60,000 that is a carrying value. You have to record at a breakup value. At what value you can sell. The probably 60,000 machine, you might sell for 1,000
Yeah.
because there is no active market for machine, right?
Yeah.
Right, so that is a big difference, that is a huge difference, that if an auditor comes in the company, auditor analyzes that is this company a going concern or not a going concern. If we say
Hmm.
a company is not a going concern, just like a the judgment day has come for the company,
Hmm.
earthquake for the company, right?
Yeah.
So right, so that's the big thing, that going concern assumption, right?
Yeah.
Consistency, if I'm following the FIFO method, first in first out method, and I am switching to the weighted average method or otherwise,
Yeah.
so can I switch it?
No.
You cannot, never.
No. We can. There. I think there are standards.
Mhm.
There is a provision, but
there are there are two reasons you can change, right? We can change when any standard says to change.
hmm.
We can change when any standard says to change, then we have to change it, right?
Yeah.
For example, suppose your company was using the LIFO method,
Yeah.
but LIFO new standard IS2 revise came, it said no LIFO now. So you have to change it, right?
Hmm.
You got my point?
Yeah.
So many companies, they were using LIFO when IS2 revise came, they had to switch it, right? When any standard says to change, you have to change, right? Or secondly, when you can say it will give a fair presentation,
Yeah.
it will give a fair presentation,
Representation.
right? That, okay, this is a better one, and you have to convince your auditor. So if auditor is satisfied with your comment, you can change it. Remember, for example, I am coming to audit your company.
Hmm.
You will give me trial balance, right? And
Hmm.
like this, obviously, the auditor will be making the financial statement. Again, they will not be making like they will not rely on your financial statement, right? Because they, first of all, the way of doing audit is different, not the profit and loss way, right? Secondly, they do not agree with your figures, right? So they will do their audit, etc. So what I'm telling you here, that if you want, if you will give me any company balance sheet and cash flow statement, and you
Hmm.
say give a report
Hmm.
or tell me about this company, I will say keep this balance sheet and profit and loss set aside. First, I want to see the notes.
Hmm.
First, I want to see the notes,
Good.
because first thing is the policies.
Yeah.
2 year, 3 year, I will see your report and I'll see what are the policies, right? So
Hmm.
policies will tell me what is the intention of the management.
Okay.
What is the intention of the management? Either management intention to show more profit or less profit, or they are going realistic. Whatever is there, they are using.
Hmm.
Agree? So
Hmm.
this is very important. So anyway, consistency we were talking about, accrual, uh, cash basis or accrual basis. Which basis you follow?
Accrual basis.
Accrual basis, right? Because standard says use accrual basis.
Hmm.
Just like government companies, like, and so they might follow the cash basis, but normally accrual basis of accounting is followed. Means receivables, payable, credit sales,
Receivables.
credit purchases, inventories are also there. This is accrual basis. Materiality and aggregation, material amounts, right? Material amounts, when you prepare your profit and loss account, do you show every expense in the profit and loss phase of profit and loss?
No.
No. For example, we show cost of goods sold. Cost of goods sold may have so many things.
Yeah.
We say selling expenses, admin expenses, but selling and admin might have 15, 20 expenses inside, right? So
Yeah.
many companies are having hundreds of expenses, but that they will, according to materiality in aggregate, at one right one head they will make it, and then
Yeah.
they will be showing it. Secondly, offsetting, right? Offsetting means, suppose you have deferred asset and deferred liability, so
Yeah.
you can offset them, show one position, right? One, either asset is more or liability is more, you can show at one head. No need to show asset as well and liability as well, right? Deferred
Hmm.
asset talking about. Similarly, frequency of reporting, how many times you prepare financial statement?
We prepare in our company one time in a year.
One time in a year, right? So at least once a year should be made, right? But just like banking companies, there's a mandatory, they should prepare the semi-annual accounts as well, right? And some
Hmm.
companies by itself, they prepare the semi-annual, probably quarterly as well. They make the financial statement, right?
Hmm.
Comparative information, 2 year data, consistency of presentation. Do not change the presentation styles.
Hmm. Hmm.
Just like you were talking about Tally.
Yeah.
In Tally, I think T account format is also there.
Tally, no, I don't think so. There's a T account problem.
There used to be, right? I
Uh,
so many years there, I saw
maybe.
there, but reporting style is good. But I had taught in some Indian universities. So I think in Pakistan as well, the T accounts, I don't know why they are teaching T accounts. Means T account means the profit and loss in T account. Why? Right? So
Yeah.
the reporting style, we call the vertical style, should be taught from the beginning, right?
Hmm.
From the
Hmm.
beginning, reporting style should be taught, because I saw I had big problem in the universities. I'm teaching the reporting style. I say that when you go into company, you will use a reporting style. But
Yeah, correct.
students were taught from the beginning the only vertical style. So sorry, horizontal style, that is T account format. They had problem, right? But in my mind, it was there. I should tell them what is actually in practice they will do.
Hmm.
You get the point. So
Yeah.
anyway, this is the consistency of presentation, what you're following. Just like we have an income statement. We call statement of comprehensive income. Statement of comprehensive income can be of two types. One, other income included in it, or one, we can say income statement separate and statement of comprehensive income separate. That is possible. One income statement, right? One style means in one statement you can make both, or you can make in separate one. So that is, if I'm 1 year, I'm showing the in one statement both of them, and 1 year I'm showing the breakup. This is not right. You got the point?
Yeah.
Uh, in the later class, I will be teaching you about the how to prepare income statement. Anyway, this is the timeline. I will not go right in detail. So you can
Hmm.
say India adopted in 2015 like this and all.
Yeah.
So assets, liabilities, inequity, etc. So actually, the definition of assets and liabilities have been changed. Have been changed, right? Conceptual framework, I think 2018 or 20 it came. So it has changed the definitions of the, this means earlier we used to say, what is an asset? Uh, Own. Anybody owns it. This is an asset. But now it is, an asset is a resource controlled by the entity
Hmm.
as a result of past events and from which future economic benefit are expected to flow to the entity. So resources controlled, not owned.
Hmm.
There's a big difference. With the word own and control, there's a big difference. I'll give you example.
Hmm.
If I call you and ask about your product, will you record revenue?
Hmm. If you call me and you ask about my product,
Yes, that product you have, you told me the prices, you sent me the quotation. Will you record sales?
no, it will. No, 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 it will not be recorded.
I gave you purchase order.
Okay.
Will you record sales?
No,
You send me the
the tax
invoice or tax invoice, whichever.
Okay. Okay.
So will you record the revenue?
No, revenue. Now, what we are doing, we are recording revenue once it is delivered.
Yes, you're right. It means once delivery made,
Yeah.
for example, you deliver to me.
Yeah.
So risk and reward transferred,
Yeah. Yeah.
right? So you can record sales, I can record purchase, right? Now who owns it? I own it. Agree?
Yeah.
Risk and reward transferred. Risk
Risk
and
and
reward transferred. But is it possible that goods are with you
Hmm.
in your possession and you
Hmm.
can record sales and I can record purchase?
No, I don't think so.
Possible. This is the word control is coming now.
Hmm.
I'll give you one example. See, I bought some machine from you
Okay.
and I say that after 1 year and after 2 year, you will deliver some parts to me,
Hmm.
right? And I probably paid money in advance. Okay.
Okay.
You delivered the machine, right?
Hmm.
But
Hmm.
parts are with you. Okay.
Hmm.
I have bound you that these parts you cannot sell to anybody,
Hmm.
you cannot use it, you cannot rent out.
Hmm.
Can you do anything of those parts?
No, only I can sell it to you.
Right? But I am asking, will you record sales or not?
Hmm. No, but still the reward is not, risk is not yet transferred, so I cannot record the sales.
You can record the sales. You
I
can
cannot
record the
record it
sale
as my asset.
because listen, because who controls it? I am controlling it.
Okay.
Who is controlling it? I am controlling it. You cannot do
Hmm.
anything of that, right?
Yeah.
So this is the word control meaning there. Now, if you want, now how it is going on, right? How it is going on? You know, sometimes people keep goods in the warehouse as well. I mean, in the you can say some rented
Yeah.
warehouse or
This
somewhere.
happens in our case,
Hmm.
like the company,
Hmm.
our company that is doing hot tub business.
Okay.
So what happens there when we import it from China? So
Yeah.
the customers they pay to us,
Yeah.
and then they say, okay, we will pick it from your warehouse, and but we have to reserve for them because they have already paid. So
Hmm.
we cannot sell it, we cannot use it, we cannot do anything.
So
We have to
then,
make reserve for them.
what you did? You were showing it in your inventory.
Yeah, at that time we are showing it in our inventory. We
But
are
that is
just making the pro forma invoice, not the tax invoice.
hmm. Okay. Fine. But you know that in that case, when we'll do the IFRS 15, I will tell you in detail, right?
Hmm.
So in but little idea I'll give you that
Hmm.
basically we call it performance obligations. When I give you example of machine, once you deliver the machine means one performance obligation machine is delivered,
Hmm. Hmm.
that you can record revenue of the machine.
Hmm.
Now left is what the those parts, right? Those parts cost whatever is there, we can divide again into performance obligations.
Hmm.
How come? One is the parts cost, the
Yeah.
other is the keeping charges.
Yeah.
So parts cost, right? So
Yeah.
the keeping charges will be over the time I can record. But for the
Yeah.
part, you can say, okay, fine, the control has passed. Agree?
Yeah.
Right? Just like you keep to an agent, you
Yeah.
keep goods to an agent, right? So it's just like I am the purchaser, you are my agent, you are keeping it. So it's
Hmm.
I have to show inventory, not you, right?
Yeah.
Anyway, when we'll go there, so understand this asset definition there. And here I was telling you separately, is a more understanding way. So revised definition. So a present right controlled by the present economic resources controlled by the entity as a result of past event, right? The word is coming controlled, right? As a result of past events, as an economic resource is a right that has a potential to produce economic benefit, right? Past event, right? Economic resource is a right that has the potential to produce, etc.
Hmm.
Similarly, obligation, right? Present obligation of the entity to transfer an economic resource, right? What we
Hmm.
used to say, anything you owe is a liability, right?
Yeah.
Anything you owe. But what is the definition now? A present obligation. Obligation means liability, right?
Hmm.
To transfer an economic resource that probably you have to pay cash, right? But sometimes they might be other than cash, right? As a result
Yeah.
of past events that let's say I purchased some goods in the past. An obligation is a duty responsibility that entity has no practical ability to avoid, right? Sometimes there
Hmm.
might be practical ability to avoid. There might be practical ability that I cannot pay. I will not pay you.
Okay. Then it will not become liability.
Then it will not be liability. If you can avoid it,
Hmm.
right? If you can avoid it.
Let's say if I go insolvent, so then it will not become a liability.
No, but insolvent is a different thing, right? Insolvent is a different thing. Like, do you think when at the time of purchase, will you sell to anybody when you know about this person might become insolvent? You will
Yeah, I
not
will
sell,
not sell it. I
right?
will not sell it. Yeah.
So at the time of sale, is there there might be a probability that you can avoid, right? If there's a possibility that you can avoid, then
Hmm.
you cannot record as an obligation. Agree?
Hmm. Hmm.
Okay, here a revised definition of an equity, whatever left over, whatever the leftover,
Leftover.
right? So let me give it a different color. Okay. The residual interest in the assets of the entity, residual, mean leftover, after deducting all liabilities
From the assets.
from the assets, is called equity. This is the definition basically. Revised definition was in decrease in assets, right? For example, depreciation, asset decreases,
Yeah.
increase in liabilities,
Liabilities.
right? If you take any services, etc., obviously you have to pay, right?
Yeah. Yeah. Correct.
The result in decrease in equity, obviously profit and loss, whatever expense you record, it will decrease your profit, and obviously it
Profit.
will decrease your equity, right?
Yeah.
Rather than those relating to distribution to holders of equity. Means, right, if you're giving dividend, is it an expense? No, right? Distribution of
But
holder of equity. Equity means capital.
yeah.
So do you think if you're giving dividend to shareholder, is it coming in the profit and loss?
Yeah. No, it's a separate statement. No?
Statement of changes in equity, right?
Yeah.
It goes to statement of changes in
Some
equity, or
changes in
it goes
equity.
to retain earning, right?
Yeah. Yeah. But not
Retain
an
earning.
income statement.
Retain earning, and retain earning is part of changes in equity, right? So, but
Yeah.
dividend or drawing is not an expense. Agree?
Yeah.
But finance providers, who are finance providers? Either the shareholders, owners, or lenders, right?
Yeah.
Or lenders. Who are the lenders? Uh, just
The
like bank,
banks or
right?
yeah.
Bank. So bank interest is an expense or not?
Yeah. It's an expense.
This is, you understand, right? So provider of equity, right? It's not an expense. If you give anything to equity holders, shareholders, it's not an expense. Okay.
And what it is called actually?
What?
The distribution of dividend.
Listen, interest is charge on profits, right?
Yeah. There is a fixed
Charge on
percentage.
profits, it goes in profit and loss. Agree?
Yeah. There is a fixed percentage.
Yeah. Yeah. And dividend is distribution of profit that goes to the retained earnings. Do
Mm-hmm.
you show any remuneration or salary of your owners?
In P&L.
Yes.
Yes, salary we show, but not the profit distribution.
Hmm. So salary should also be reasonable, right?
Salary should also be,
Reasonable
yeah, it should be reasonable, of course.
means, for example, whatever profit you are getting, and all you show as a, okay, this is my salary. Is it possible? So that there's a zero profit and no tax. Can you do it?
No, it
No,
cannot be.
you cannot. So if you are showing salary, it should be reasonable.
Yeah.
So right now, because there was no before, there's no corporate tax, right? Now
Hmm.
the corporate tax is coming, so there are some limitations on that. We will see later.
Hmm.
Okay, revised definition of income: increase in asset, just like expense was decrease in asset, right? So
Yeah.
revenue will be increase in asset, just like opposite, all
Yeah.
decrease in liability that results
Vice
in,
versa.
right, and all. And here we see the process of computing for inclusion in the statement of financial position or statement of financial performance, etc. Recognize what you will recognize. Obviously, either in the balance sheet, asset you will recognize, or expense and income you will recognize in the statement of financial performance, that's P&L, right? An item that meets the definition of asset or liability, equity, income, or expense, you have to recognize it. So, anyways, because we are doing the conceptual framework. This is all part of conceptual framework, right? This is all
These
part
slides I
of,
will have after the lecture.
sorry, yeah, I'll send you.
No.
I'll send you that. Right. So this is what we were talking about, recognition of elements of financial statement, right? We discussed, and this is the conceptual framework. We have two things there. We discussed earlier regulatory framework. Now we're discussing the conceptual framework, right? So
Hmm.
what is a conceptual framework now? Right. It is a statement of generally accepted theoretical principles. So what is conceptual framework? Generally accepted theoretical principles which form the frame of reference for financial reporting.
Hmm.
To assist the board in developing the IFRS. So how board will be developing IFRS or new IFRS? They will see these principles, right? General
Hmm.
accepted principles, and according to that, an standard will be made. Promoting harmonization, assist in national standard setting, right, to assist prepare of financial statement in applying IFRS. Now I'll tell you one thing.
Hmm.
See, suppose you have some asset or you have some income, something you have,
Yeah.
you want to record. For example, if I say you have to record inventory, you have an item, right, inventory, so you say IS2 inventory, okay.
Hmm.
Whereas you
Hmm.
say you have some fixed assets or property plant equipment we call PPE, right?
Yeah.
Non-current tangible assets, non-current tangible
Tangible.
assets. So that you'll say property plant equipment IS 16,
Year 16 year.
right? So it means you have a relevant standard there.
Yeah.
Suppose any type of asset or expense or liability, anything you have, for this you don't find any standard.
Hmm.
What you will do? You will try, there's no direct standard mention about that particular item.
Hmm.
So we have the elements of financial statement, that is the financial position, balance sheet. We have asset, expense and liability, sorry, asset, equity and liability in the balance sheet. And income statement, we have income and expenses. These are the elements of financial statement, right? So
Yeah.
for any element of financial statement, you don't find any standard there. So you will see any related standard.
Hmm.
Agree?
Hmm.
You will try to use any related standard. But suppose if you do not have any related standard as well, suppose,
Yeah.
then this conceptual framework you have to use to understand how to treat it, how to
Hmm.
recognize it, how to de-recognize it, how to measure it. You got my point,
Hmm. Hmm.
right? So as I told you that it assists board in developing and reviewing IFRS.
Yeah.
So it means this is a master key, or this is a, you can say, main your comprehensive thing, right?
Hmm.
So
Hmm.
from that you will be means inventing things. So whenever you have to make anything, for example, we say any religious book, any question you have to answer, they will give from relevant book, from the Quran or Bible or whichever, right? So they try to answer in from that way. You got my point.
Yeah.
Similarly, right, these are the conceptual framework are reference are there. So when these principles are there, so any new element or any new item has to be recognized or de-recognized, you have to use this conceptual framework. And that even the board is doing. Even the
Board
International
is.
Accounting Standard Board, they develop standard by looking those conceptual principles. Understand?
Hmm.
So this is very, very important thing. So and that in according to that, right, you can see these, we decide, we have learned these assets and liability definitions, right? So these
Yeah.
definition are given by the conceptual framework, right?
Hmm.
Right. So it means that anything you can record by these rules, these principles are mentioned, right?
Hmm.
These principles are mentioned. Let's see, we saw, right, transfer of economic resource, past event, no practical ability to avoid. So these are the principles, right? By which you can record an asset or liability. Got it? So this is our accounting principles, etc. Right? And right. So this is that. There are a lot of things. De-recognition, right? When an asset is there, obviously, how you can de-recognize, right? When the entity loses control of all or part of the recognized asset. For example, an entity has sold, right? Or
Yeah.
they lost the case of and they lost some asset in the
Yeah.
court, right? So it means now they have to de-recognize the asset,
Yeah.
right? Sometime before the life ends, the asset might not be usable,
Yeah.
right? So that you have to de-recognize the assets,
Recognize that. Yeah.
right? When the entity no longer has a present obligation for the liability, when the entity has no longer present obligation for all or part of the recognized liability. For example, there was a case going on,
Yeah.
right? And you were thinking probably I have to pay, but the case resulted that you don't have to pay. So that liability is no more payable. Agree?
Yeah.
Or suppose a company was there that whom you have to pay some amount, but that company has closed down before taking the money they go. Has it ever happened that you recorded any liability zero?
No, that didn't happen.
Hmm?
No, that didn't happen.
That did not happen, right?
Yeah, in most of the cases, the companies are open and they claim. Yeah, but sometimes it happens that, let's say, the company also forgets the amount was small, let's say 2000 or 1300,
Hmm.
and it was pending for more than 10 years.
Hmm.
So I have seen that kind of amount as well, and I have closed it
Close it. How close?
by just reversing the entry. That's it. Or
Reversing.
may or just taking it as a part of income or something like that. What we can do.
I'll tell you the technique.
Yeah.
Call Pizza Hut
Mm-hmm.
and all people in the company give the pizza. This is the one.
Yeah.
Just joking. Actually, this happened in one of my student. He told me that 500 dirham there was there that it was in the cash. It was coming more for so much time, coming more, right? 1 year gone and so gone. So I asked about my finance manager that more than
Mm.
500 amount is more and nobody is asking me, right? And
Yeah.
what I do, so the finance manager actually did this. He said, call the Pizza Hut. Pizza
Ah,
Hut.
okay.
So
Okay.
this is actually it happened. You
Yeah.
know that what bad debts, if you have to record, so you do know that 6 months more, any debt is there, so you can record it as bad debt,
Mm-hmm.
right? So this is by law is there. Anyway, de-recognition we have seen, right? Requirement of IFRS, statement of financial position. So statement of comprehensive income, separate statement comprising an income statement and separately statement of comprehensive income, which
Mm.
reconcile profit and loss. This I told you, I think, right? Statement
Yeah.
of changes in equity and cash flow statement,
Cash flow statements.
notes. So these are all basically the part of the financial statement, right? So
Yeah.
financial statement consists of or comprise of financial position, balance sheet, statement of comprehensive income, that is profit and loss, statement of changes in equity, cash flow statement, notes to the accounts, etc. Right?
Yeah.
Mhm. Main changes from the previous version are to require that entity must present all known owner changes in equity, either in the statement of comprehensive income or in the two
Two
statement.
state.
So all non-owner changes. Owner changes are in the retained earnings, right?
Yeah.
So non-owner changes you have to report in the statement of comprehensive income, present the statement of financial position when the entity applies the new standard, right? And present a statement of cash flow, make necessary disclosure requirement, etc. Anyway, this is about benefit of IFRS, and these are the IFRS things, etc.
Yeah.
Right. So let's see this question. This is from your diploma book. Right.
Mhm.
You are the financial controller of Omega. Omega
Yeah.
has subsidiaries located in number of different countries. Omega has a strategy of growth by acquisition and regularly evaluates potential acquisition targets from different countries and
Yeah.
financial reporting regimes. Right?
Yeah.
So, what they do? Growth by acquiring and evaluating potential acquisitions, different countries. So Omega regularly seeks to raise capital on a number of different markets to fund new acquisitions. All subsidiaries currently prepare financial statement using applicable local accounting
Counting
standards.
standards.
The consolidated financial statement have been prepared using the local accounting standard that apply in the Omega's jurisdiction up to and including the year ended 30th September 20X1. Local regulations allow financial statement to be prepared either using the local accounting standard or IFRS
IFRS.
standard, right? Local or IFRS. The
Mm-hmm.
directors are giving serious consideration to using IFRS standard from the year 30th September
September
20X2.
onward.
It means after 1 year. One of
One.
the director is unsure of the wisdom of the proposal and has identified number of issues about which he is uncertain. Before I can agree with the move to IFRS standard, I need to understand how the standard setting process works.
Mm.
Someone told me there are 4 different bodies involved. Please give me a brief description of each one of these, highlighting their role. So we discussed 4 bodies. What were the 4 bodies?
Uh,
IASB,
IASB, ISC.
IFRIC Interpretation Committee, right?
Yeah. Yeah.
Advisory Council, Advisory Forum, right? So
Yeah.
at the top, if we talk about IFRS Foundation, IASB, Advisory Council, Interpretation Committee, right?
Mm.
Okay. Second question, I am unclear about the practicalities of adopting IFRS standard in year ending 30 September 20X2. I have heard that we need to start with an opening IFRS statement. I am unclear what this means and for what date it is prepared. Please explain the process for me, including any additional disclosure. We need to do it, right? So, as I told you that they have to make for which
First,
year they want to make it.
yeah.
They want 2000 X2, 30
Yeah.
September X2 financial statement. They want to make it, right?
Yeah.
So, three financial statement they have to make, right?
They have to prepare.
Right. So year two, let's say that will be 2001, right? 2000 and September 30, 2000, right? 2002, 2001, and 2000, right? Three
Yeah.
financial statements they have to make it.
Mm.
Right. So the financial statement for the year 2022 will include comparative, which must also be prepared using IFRS standard. Right. Therefore, IFRS statement financial position will be present for October 2001, the opening for the comparative, and 2000X1 for the comparative. Right. Means that 3 becomes right 2002, and for 2002 comparative will be 2001,
Mm.
right? And opening will be of 2000 there. So 3 will become, right?
Yeah.
And for September 20X2, a comparative statement for profit and loss will be from only 1 year. Profit and loss only 1 year for 2000X1, right?
Mm.
So this is what we discussed. As part of the understanding of IFRS statement, I have become aware that a revised version of the conceptual framework for financial reporting was issued in 2018. I would like to understand better what the role of conceptual framework in developing IFRS standard and whether there are benefits to having a conceptual framework. So I told you about already conceptual framework, right? So
Yeah.
what is the conceptual framework? You can write down about that.
Like when the
Sorry?
like when the assets decrease, something like that you told me.
Yeah. So purpose, this is about, you have to write, you don't have to mention about the definition of assets and liabilities. You have to mention, right, ISB completed the conceptual framework in 2018, right? It's a theoretical conceptual basis for determining which transaction should be recognized in the financial statement and how transaction should be measured, historical cost or current value and reported,
Currently.
right? That is how they are presented or communicated to users, etc. And purpose of conceptual preparation, assist the, we discussed about this, right? Assist the board, etc., etc. This is about conceptual framework, and here I particularly mention setting regulating standard, some things related to that, right?
Yeah.
Means all we studied this is similar thing, right? Explain, these are the question, explain the objective of IFRS Foundation, describe. So what is the function of IFRS Foundation? This is basically the kind of monetary committee, right? So IFRS Foundation, what it does, like here as mentioned, and then second one, describe how the ISB goes about developing and issuing new international financial reporting standard, right? How develop means research program, three things I mentioned, right? Research, right, level, and then developing level and implementation level, right?
Yeah.
So develop the high standard, understandable, forcible standard, promote the rigorous application of those standard, take account of range of sizes, etc. Means this you can go through,
Yeah.
right?
Yeah.
So we have completed this all. So today, this was all we studied. Basically, what we have done up till now, we have done regulatory and conceptual framework,
Hmm.
right? And if I show you here, regulatory and conceptual framework, and we have done about first time adoption,
Yeah.
IFRS, right?
Yeah.
So now what I will do, I will be sending you the book, right?
Hmm.
And I will be sending you the presentation, what we have done in that, right? So let's have a glance over the book as well. Here they have mentioned. So what are the examinable document standards will be there? IS 2, 7, right? IS 8, 10, 12, 7 is also there. I don't know why they did not mention. 12 and all there. So you can see IFRS 16.
Hmm.
Agree? So 17 was not there. Probably this time it might be there. So IFRS for SME, these are the ones which are included in it, right? So few
Hmm.
standards are not there in it. Few standard, right? Just like 7 is not mentioned, but I will be teaching you 7 as well, right? 10, 12, 16, 19, 20, 21, 23, right? 24, 27, 28, 32, 33, 36, 37, 38, 40, 41. I'm just checking if anything is missing. I do know 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All are there. 17 is not there. IFRS IS7 is not there. IFRS 17 is not there. Otherwise, all of them are there, right?
Hmm.
Anyway,
Hmm.
let's have a glance. This is the paper format and all. What is the scope of IFRS standard, interpretations of IFRS standard? So you have to go through the book, right? You have to go through
Hmm.
the book, etc. Right? Comparative year, I told you about first time adoption, 2009, 2008, 2000, January 2008. It obviously it will be 2007, right?
Hmm. Hmm.
So, right, transition process, I told you, derecognition, recognition, and all main exemption from IFRS, right? So, from IFRS statement in the opening IFRS financial position, property, plant, equipment, investment property, intangible assets, right? Fair
Hmm.
value gap, etc. So this is, you have to go through business combinations, right? So go through about this data, right?
Okay.
This was there, and conceptual framework that we also discussed, advantages, disadvantages, ISB, right? And it's having objective of this, right? Fundamental discuss materiality, faithful representation, right? So some things are we have done, something we have not done. Objective finance statement we have done. Reporting entity, what are assets, right? Examples are there, liability, right? So go through about that, right? So in the next class, we'll try to go through will this one as well, recognition, de-recognition, right? So these are also there. So at the end, they have asked some questions. What is conceptual framework, advantages, disadvantages, and all. So go through about these chapters. We will in the next class. I would like that once you read it, so you will be able to do. And at the end of this book, right, you can see
Yeah.
question 1, 2, 3, 4, right? Up till 4 question you can attempt at the end of this book. Okay. At the end of this book, you can find 1, 2, 3, 4, like this. Okay, these are the questions. I think this question, right, we have done explain the regulation, right, and all this stuff, conceptual framework. We did that, and up till 4 questions, right? Up till 4 question, you should try to see it. And these are the questions there, and at the end, the answers are also there. Okay. So please go through up till the question 4.
Okay.
Okay. Okay. So good luck for today, right?
Thank
And
you.
I'll send you probably tomorrow the material. Okay.
Okay. Okay.
Good luck.
So next class will be on next to next Friday.
Yes,
Yeah.
probably
I mean
this
after Eid.
Friday. I'll see the policy of the institute. Actually, it depends on,
It's okay. It's okay. It's
right.
okay.
So because I think Eid is coming on which date? 28th, right? 28th is means that Wednesday, Thursday,
Yeah.
Friday. So 3 days, obviously, there's Eid there, so probably we'll not have class. Right. If we take
Okay.
the class some other day, right, Tuesday is possible.
Okay. I will.
I'll
I will tell
update
you
you
about
about
it.
that. If it is that. Okay. Good luck.
Yeah.
Good
Thank
luck.
you, sir.
Take care.
Thank
Bye
you.
bye.
Thank you. Bye.